Hey, good morning, everybody. This is our Tesla review. After last week, we could see that our overall blueprint worked very, very well. We did hit the 478 by 489 level. This was my projected target and was hoping to see towards 500, but we just couldn't get up and over that. So now we are going to put a blueprint together for this short week. While doing that, if you wouldn't mind just hitting the like button and sharing this video with your friends and family who are interested in trading Tesla not only for the long term, but also the short term. And I am using 100% technicals here. I'm a professional supply and demand trader. I'll be identifying those levels with you, and potentially and hopefully this will help you in your trading of Tesla. All right, so Tesla, after coming up and hitting our levels, what is very important about this week is recognizing that we have this huge topping wick. Now, if you go over to my YouTube channel and you watch my short video about topping wicks, you will find out very fast that this is the sure way of getting ahead of a potential uh, turn to the downside in whatever name you're looking at, whether it be a stock, futures, forex, doesn't matter. Topping wicks let me know that there is selling pressure up above. The next thing that's very important is identifying what we call an inside candle. So far as trendy methodology goes, this is the body of the previous candle. And as long as the candle that we are talking about, this one here, closes within the body by the end of, in this case, of the week, this is an inside candle. Now, inside candles will potentially move into what we call inside and up or inside and down. Let me show you what those look like really quick. So an inside and up formation looks like this, and an inside and down formation looks like this. Okay. Now, there is a line in the sand, if you will, that's very, very important with this formation. And we're going to go over that because this is going to serve this week as your over under. So we're going to open this up a little bit and we're going to come right underneath the bottom of this body, which was the close, um, which just happened to be at or around that 420, 421 level. You guys can see it right there. Okay. So 421 is going to be that over under for this week. And again, anytime it's under that level, then it is an inside and down formation. Inside and down formations lead to further continuation to the downside. Now, this is where it's really important. So please listen to this in slow motion. We are talking about a weekly candle. So this candle on a smaller time frame can always move right back above the 421 level and continue to move to the upside. So what I'm really focused on here is whether the weekly, okay, so the end of the week, does it close underneath? So that would be the 27th underneath this body. If it does that, the potential for a down move into what we are going to find as demand is most likely, okay? If by the end of the week we are at an inside and up formation, then that is a really nice sign that we will continue to move probably towards that 500 to 550 level. Okay. So next, let's go ahead and try to identify where we are willing to go long in the case that prices, decide to continue to pull back. So we are going to use this formation right in here. This is what we call inside and up formation. And a couple things that you can do is you can, if you want, you could put volume profile on here and take a look just to see if right around my levels, you see what you're looking for if you use volume. Now here at Trendy, we don't teach volume because honestly, you can find by looking at the structure and the size of the candles where the volume is coming in. Think about it. The bigger candles have bigger volume. The lower candles or the smaller candles have lower volume, okay? Now this structure right in here, we're going to go ahead and create a zone. Looks just like this. You'll notice when I put this gray zone on here, we have these levels that are already in here. These are called trendy edges. These are part of my indicator package at Simpler Trading that identify a playing field of supply and demand. As I've been trading for a very long period of time, I've really learned to live with the idea of we want to be within a playing field. We don't have to be exact. Trying to be exact with trading can really be frustrating because you're just putting too much stress on yourself and on the position. So just understand that when we come down to these levels, we're just looking for buyers to come in at this area. It doesn't have to be perfect. A couple things I want to point out to you is that the 9 EMA on the weekly chart is confluent with the structure, with the trendy edge, and therefore this is a great opportunity to buy what could be fear if price comes back into this area. And of course, you know how it is. It's always euphoria into the top, and it's always fear into levels of demand. Let's go ahead and identify this level as demand. And I get the question every once in a while. So, John, so you just like find structure and go, okay, this is demand. How do you know if buyers are going to show up here? Well, I've been doing this for a very long period of time, been teaching thousands across the world. And you get to see this all as a proof of concept when we are trading live. You'll see how much these levels do work. And basically, what it comes down to is just understanding by looking at bigger candle formations and structure. These are buy blocks, if you will, and what happens is when price moves very quickly, it creates what's called imbalance in the market. So not all orders are filled. And when we run out of buyers, prices like to come back to areas where they know investors are willing to buy. Okay. So again, that would be this area in here. And then you can see that we have one down here below as well. So we actually have all of this area. And what's really neat is during this whole entire move up, we've created little demand zones. But for this purpose going into this week, let's just keep our eyes on this level here. Now, one thing I like to do is just come up just a little bit above the green box and a little bit below it. Okay. And to copy something on Thinkorswim, you just click on it and then you hit your space bar and it will duplicate. So I'm just going to put that word right in there. Let's go ahead and take this off right here. This is just part of the Fibonacci extensions we did last week. All right. And if we want, let me do, actually, I'm going to clean this up just a little bit. All right. So we have the 38.2. We'll put that on there and then we'll go to the 50 right here. I want to clean this up. Boom. Take this off. Yeah, we'll keep these Fibonacci extensions on there. That's just in the event if price moves up and over this level, these will be your targets to the upside. Okay. Again, inside and down, 9 EMA, trendy edge, structure, and let's just do this for kicks. I don't usually do this with you guys, but I am going to pull up. Let's go here and let's go into here. Let's pull up Tesla. And this is for some of you folks that like to use volume out there. We'll come right here into VRVP. We're going to turn that volume on. We put Tesla in there and we are looking at a weekly. All right. And basically what we have, okay, is that we identified this level in here. So watch, when I come in here, sorry about that. When I identify about that same level, which is right here, if you go over to the left, you'll notice that the 9 EMA and the structure, we do have a volume shelf there. All right, pretty much right, right around those areas that I am showing you. Again, if you like volume profile, it's great. There's nothing wrong with it, but you can find and understand just by looking at structure. Like, look at this big candle. See this formation, this inside and up formation? Look at this huge volume shelf. All right. So again, these are identifying structures. And if you want to back test and just get an idea, it makes sense. The longer you're in the market, like I just don't need to look at volume. Like I understand volumes coming in. It's like, hey, the candles are going up. They're moving fast. There's a lot of volume in here. This is where the structure is. It just works out very, very well. All right, so again, we have that area in here. We are at 421. I'm not saying that we're pulling back to 371. What I am doing with you is identifying potential areas where we want to get long in the event that investors or traders are shocked and price pulls back a little bit harder than what they expected. Kind of like the market this last week, okay? All right, now let's go ahead from a top-down approach. Let's get into the daily and see if we find anything else. Okay. So this is exactly what I see, and everything that I teach is fractal. So the inside and up formation was also and happens to be right here where we closed. So, because of that, I would expect a pop into tonight or tomorrow. If you didn't know, you can go to Robinhood and check out night like there it's not that liquid, I guess, but you can watch price action. And matter of fact, I believe Thinkorswim is starting to show Tesla's trading range, like not range, but their bid and ask at night as well. But yeah, you can go to Robinhood and check that out. But again, this is the structure right here. There is an inside and out formation. So right here is your immediate demand. Okay. So this would be a green zone as well. So let's go ahead and identify that. All right. So we know that 420.97 is kind of like that over under. I'm going to go into here and I'm going to come to HSV, which is your transparency. I'm going to make this very transparent and kind of try to make it light. And we're just going to say over under. That's what we are going to title this. Okay. So over under. And remember, what does this mean? It means we're going inside and up or inside and down. Right here where it says show name, you just created a name. You're going to say on the right and go ahead and click there. And you see this very faint line there where that over and under is. Now, the reason why I did that is because I don't want too many lines on my chart. So we're going to do that. This is your daily demand. And it's really good to get into the rhythm of identifying what time frames you are identifying these demands, right? So that's your weekly. This would be a day, and you could just put a D for day and W for week, something like that. So we are going to put that in there. And this is the daily and the weekly demand zone. So again, let's just go ahead and talk about this. On the weekly, we've identified a great area where I believe buyers are and would step up. But for right now, on the close on Friday, we came into some structure here as well. I would expect a pop from here. And now what I need to assess is where could price move? So if we do gap up tonight or into tomorrow morning, where is the potential of take profit or just understand where your resistance levels are? We are simply going to identify and use Fibonacci. We're going to start at the top of this candle structure, come down to the low, and then we are going to put together levels, and we'll talk about those levels. Okay, so your first target on a pop to the upside, we're going to go just below the 38.2. I have a trendy edge there at around 443, 444, somewhere in there. And let's talk about Fibonacci. This right here, the 50 and the 618 is your golden pocket. If for some reason it doesn't gap over this, this is a potential for a short-term short. So let's go ahead and identify that right now. We're going to write in here golden pocket, just like that. If we get up over the golden Fibonacci, which is the 618, then in this case, I do believe we could run to 475 by 480 by the end of the week. All right. So again, if we can get up and over the golden fib, I believe we could head to 475, 480. Now, if you haven't watched my broad market analysis yet, please do so. That is on my YouTube, and I did post it out on my X account. And you would understand that this scenario that we have right here looks just like the rest of the market. So basically, you have imbalances below, and then you have your area of supply in here where we wouldn't expect price to get up and over. And then we have an area that we could potentially bounce from. But when we draw, like, just say a line, you're basically equilibrium between an imbalance in the market and an area where there are sellers. Okay, so it looks just like this. All right. All right, so golden pocket right here, potential for a sell-off. If we can get over the golden Fibonacci, which again is, we do Control Z, that brings it back, 462. Let's take this right here and place it right above the 462. All right, so if your alert goes off here, good chance we're going to see 475 by 480. But for right now, if we gap up, which I would imagine we could gap up into the 443 level, but be careful around the golden pocket. And so we're just going to go right there. We are going to draw this out so that you can understand. If we get the pop up, boom, kind of come in a little bit. Buyers show up in the morning, could see this, and then we just kind of do something like this, okay? Now, big news, if something big happens, then it will crush through this level, and then you'll find yourself in here, but I believe this is what could happen. Now, if I'm completely wrong and the structure doesn't hold, please understand the structure is the combination of the three of these candles in this example that I'm using. So the bottom of that demand is at 400. So if I'm wrong, and we actually gap down or something, I'm looking for buyers at or around this 399 level. It is also confluent with this next EMA, and it's still confluent with our next structure. So therefore, we could find value there at the 400 level. So if this, then that. If we gap up, be careful. I expect resistance in here. If we gap up into the golden pocket, this would be and could serve as an area to go short from an intraday perspective. If we gap down into 399, 400, look to buy the dip. That would be voided on a close under 400. And overall, I'm not really expecting prices to move further than 475 to 480 for this short week. Again, if this then that, if we close above this and I am, get surprised by the move, then we start to look for those other targets that we talked about, like the round number of 500. All right. So the next thing I want to show you before I move on is yes, I said 475 to 480. One easier way to find supply without using the structure in this case is you could draw a box from the top of that wick and you bring it down to the top of this body right here, and this would serve as your supply zone. So if we do that, you could see that the golden pocket is very close to that supply. So really, this is why I feel in this area, you have to be really careful no matter what the news is. Price is king. News is just a catalyst to push price to supply or demand. Overall, for myself, I made money on the downside in Tesla this past week. I did add some shares, and I instead of trimming any of those shares, I just continue to add on dips and could see myself adding all the way back into these levels down here below. I want to take it really slow on my ads. Um, Again, anywhere there's demand, all I'm doing is accumulating for the long-term approach. And then as price goes up, then I start to trim out on those positions. Okay. This is my forecast into this week. If you've had and or enjoyed this information, please go ahead and leave your comments and please like this video and share with all your friends and family. Thank you so much and have a wonderful Christmas.